Hello, welcome to the first class of technical analysis. Yes, it is going to be a series of videos on technical analysis where I'm going to cover each and every topic of technical analysis to make you a better trader. Yes, technical as a science, if you complement it with other trading strategies or other trading tools, it can help you empower you further. However, you can have very discretionary trading systems also where you can simply rely on technical analysis. But I am one person who mix all these sciences and try to come up with something which can give me better reward, risk reward ratio and better success. So before I start this technical analysis class, few things I want to speak to you. The very first thing is few analogy which I want to give you with some examples, and then we will jump to few practical things also. So if I tell you that I have one information for you, or maybe you are in a position to collect one information, and this information is there is one FII desk for an institutional equity. So they are investors who are going to invest in Indian market in a huge volume. Huge volume means, let's say there's one pension fund in US who decided to put some money in India and they decided to buy 10 lakh shares of Reliance. So if I give you this information or if you collect this information through some source, what will you do? I'm sure you will say that if there is such a huge order flow and there are people who are big analysts, there are people who are managing $1 billion money, if they are taking decision to buy Reliance at 1500 rupees, let me also jump in the wagon. They are going for maybe 10%, 15%, 20% return or even higher. I will safely make that also. You may also think that now that there will be an order of 10 lakh shares of Reliance, maybe 3-4% it will automatically jump. And then you will come out of it. But then you know that this information is a very, very private information. If you try to get into any desk or if someone working on this kind of desk is connected to you, then it will be, and if this exchange of information is happening, at least in the US, you will be put behind jail. In India, still law is little lenient. You may not go to jail, but certainly that person who is giving you this information will be fired. And then if you are caught into the insider trading and you have plans of trading or giving suggestions to the client, your license can be barred. Maybe jail or not jail is a very thin line in India, but it is illegal. You cannot take a classified information like this and trade in the market. Well, then why was I telling this? What was the point I was explaining you this case? Well, certainly you cannot go and ask people for this information, but if I tell you that there is a science or there is a tool where you can analyze these patterns, where you can go and see that, okay, fine, maybe on the very that day, I'm not going to buy Reliance share. But then I want to go and see that, okay, within certain time frame, maybe 1 week, 1 month, or maybe one day, there's a huge volume. And on that day, most of the people bought. If you get all this information, let's say on a chart or through one science, would you like to believe that science? Yes, you would like to believe that science. Technical analysis, a lot of people are talking about these days price action, technical analysis, indicator. But the microstructure of the technical analysis is obviously volume plus price. You put them in trend and indicators are all secondary thing. Okay, so yes, the answer is yes. If you get to see volume, you can take some judgment. If you see very thin volume, again you can make some judgment. What are those judgments? We will learn. We'll learn in this class, this technical analysis video series, class series. But then, yes, volume is something which you have to remember now. if I tell you that the same Reliance company, every time it goes to 1500, people start buying it. It don't go below 1500. I mean, yes, stock market is volatile. Instruments will keep on going up and down, but then sometime they may stay in a range. So every time it's going to 1510, 1505, 1520, it jumps back and it goes to 1700. And the moment it goes to 1700, 1705, 10, it will start falling back towards 1500. And you have seen this pattern, or this, you have observed this in last 6 months, let's say 5 times. Now stock is trading at 1700. What would you do? Will you be able to take any decision? Just because I have shown you something like this, we have found one data like this together, and then you know that last 4 instances this has happened. What will you do when the stock price is 1700? Let's say someone told you, or maybe you analyze, you are a value investors, you went by the book, you are a value investor, and then you said that, oh, you are finding Reliance valuable at 1700. And but then someone told you that, hey, start looking at technical analysis in the charts also. Well, it can be used by investors and traders both. So here you have 1700 in your screen, you are getting the news that, okay, fine, you can buy, I mean, you are analyzing, you buy Reliance. But then don't you think you would want one thing? That, okay, it's trading at 1700, I have seen that from 1700 it goes to 1500 and then jump back. So maybe I'll wait for maybe for maybe a month or something and see whether it comes down again to 1500. I have to buy Reliance, I'll buy at that level. Okay. Or you can say that I will again buy if this time, maybe this time, it don't go back towards 1500, but from 1700 it goes to 1720. Then maybe, yes, I will buy, because anyway I was about to buy Reliance. Now see the risk reward ratio. The risk reward ratio is, instead of buying at 1700, you are going to buy at 1720. So 20 rupees lesser profit you will be making. But then if by any chance that pattern again get repeated, it may come down to 1520. And then you can buy it 180 rupees lower. So what do you see here? You see here that yes, prices also tell you a lot of things. That historical prices have moved in certain pattern, in certain range. I don't want to use any geeky term right now, but do you understand that how you can take benefit of it if you have these historical data? Technical analysis is nothing but the graphical representation of these historical data, which you can do for both price and volume. And you can analyze that to back your trading strategy, to make your investment decisions. Trading strategy, how? So let's say I'm an option trader. I'm one guy who always write calls. This time again I want to buy sell call and eat the premium. But then before that I want to be double sure that, okay, fine, writing call, give me one edge by that premium, which extra premium which I have taken. Time value of the money will be in my favor. But then if on the technical side I am able to decode certain pattern where it seems that the kind of premium which I'm going to collect, market will run 5 times of it, then you may club this trading decision of options with technical analysis and be little safer, or try to generate better return. Let's say you are a statistical arbitrage trader. What do? You buy one share and you sell another one, which are highly correlated instruments. What will you do now? Well, you got a clue that buy Infosys, sell TCS. But then again on the graphical representation, what do you see? That there could be huge dip in Infosys. Don't you want to now double check it? The whole analogy, the whole science through which you have generated the alerts in pair, you may want. Yes. So having this extra knowledge will about the technical analysis may help you as an investor also in short term, and as a trader also, where you can combine it with different strategy. But as I said, independently, a lot of people use technical analysis as well to do intraday trading, to do scalping, to do swing, to do price action. So I have never been a very, big fan of a standalone technical analysis. But this time, since what I see that people whom I teach in my 990 rupees course, or in my statistical arbitrage course, or my advanced option trading course, I see somewhere that they lack this knowledge, the basic knowledge of technical analysis. And if they have been given the advanced knowledge on technical analysis, they can improvise their trading strategy by certain percentage. And for that purpose, I'm launching this series of classes on technical analysis, where this is your introduction class, in which so far I have just given you the analogy. But in between this class, I want to tell that technical analysis, which I feel that it is certainly a science, it's a technology, you have tools here. But then what is very important, that you practice this a lot if you want to do standalone technical analysis and become a trader. So for that, you should be doing a lot of paper trade. That also I'll be explaining here, that how you can do paper trade and first test your strategy well in advance. But what I'm also feeling, that I have never, I have never focused on my YouTube channel. So 90% of these classes where I feel that the literacy is important for people, I'm planning to upload free only if you people. I've never asked in my YouTube videos whether you have to like, subscribe or something, but this time I want to say that if you want that these contents which I'm making for my paid courses, if I should be uploading here it on YouTube, like other people, other teachers are doing it, then please help me. I'm going to put some goal for my YouTube followers who are in very small number, not like others who are having millions of followers. But yeah, so maybe most of my YouTube videos don't get even 5,000 view. So if this video is going to get 10,000 view, I'll upload also the second class in the continuation of this class, which I'm going to upload in my paid classes. So yes, technical analysis is something which I feel that should be used as a backup science. However, a lot of people use it as an independent science, so for them it will be beneficial. This free classes. So now I've given you two analogy. One is about the volume, and another is about the price. Third thing, which is very important thing, which I want to tell you. So here you have market, and then you have seen this market, observed it market for years, and then you came up with one book. I mean, this is not a technical analysis book, but yes, technical analysis book. Doesn't matter I'm teaching or someone else is teaching, they're going to teach you the same thing. What is written in that book, which has evolved over a period of time. When I say that book, combination of technical analysis, theories, indicators, and all those things. So one thing you have to remember here, that the book has been written looking at the market. Okay, but this doesn't mean that this book is going to govern the market. So this you have to always remember. What as a trader you have to do is, you have to work on risk reward ratio, and you have to make sure that you are applying enough science and see that every time you are going to apply this risk reward ratio, they are backed by percentage of success also. So I may trade with 2:1 risk reward ratio, where I am putting 2 rupees at risk and making only 1 rupee in my option trading, let's say. Then I should be 85% profitable. I may trade with 1:5 risk reward ratio, means I'm taking 1 rupee risk for 5 rupee profit. Why? Because I have done a lot on the charting side. By the way, a lot of so see, I launched courses for purpose of financial literacy so that people don't lose money in the market. But what I see, that the very first time people lose money is by buying a lot of technical analysis courses at a very expensive price. So for that reason also, I think the very first thing you have to save your money on technical analysis is by probably, maybe you can support my channel and I'll do it for you. I'm gonna cover everything here, be it price action, be it all the technical analysis concept, all the indicators, especially the indicators which I use and I'm comfortable with. But yeah, slowly and slowly I'll start revealing. So here, what I'm trying to tell you that, yes, everything will be taught, but then you have to practice. You have to practice. You have to take defeat also. And defeat is nothing but getting your, losses. I mean, when you are making a loss, you are making a loss. If you are 80% time, if you are making a profit, be disciplined. Don't worry about that one loss out of 10 trade. It's completely fine. So yes, book is written looking at the market, but the book will not govern the market. So exceptions will be always there. What could be those kind of exceptions is something also I'm going to cover in every coming video on technical analysis. But enough theory. Now I think we should start and do few exploration thing on the technical analysis side on the very first class itself. So two things. As I said, technical analysis is a technology, it's a science. And science and technology are always backed by tools. You need to have tools, right? So for the graphical representation also, you cannot take a pen and paper and draw the chart here now that we are in the age of computers. So you need a software as well. So the software which I'm going to expose you, or which we are going to learn together both on a iOS machine and a Windows machine, is TradingView. So TradingView is something like where charts and patterns are formed. They take the data from the market, they throw it here, you can use it as per your convenience, and whatever can be covered inside technical analysis, what all the books have been written around technical analysis, what all indicators, chart type, tools can be created, they have integrated everything. I don't think there is anything better than TradingView. So I'll show you TradingView maybe, and TradingView is one software which we will use, as I said, tools and technology. And for technical analysis, for graphical representation, you need charts. Now, chart can be of many types. So again, we are going to pick up something which is very, very easy and very, very clean to represent chart type. What is that chart type? It is, I'll show you first. So let's come to the screen and see few things. For some people, TradingView itself can be a little complicated. So especially the beginners. So what we will do is, now I am not going to use any function in this very first class on TradingView. Only very few things. So what we wanted to learn technical analysis. In technical analysis, what we need to learn, we need to see that how the data can be graphically represented. What are that data? Data is volume. What is the other data? The price. Now, price in which form? That could be another question. So for that, I'll give you one more analogy. But let's first see that, okay, this is TradingView, this is how it look like. Since I'm giving the example of Reliance, let me pull up the Reliance graphical representation of the historical data. What time frame? We'll see that. So here on TradingView, once you have logged in and everything, I'll make a very separate video in the next class only on the TradingView. But here I wanted to explain you something. For that, you don't need any access on the TradingView. So just be with me. So now I want to pull Reliance data. So all I have to do is type Reliance, and then all symbols of Reliance will show here. I can select one of them. Well, you can see that in background it is written Reliance. Few more things are written. What is that? 1D. What is this 1D? We'll talk about that. Then Reliance Industries. So this is Reliance Industries chart. I can scroll my mouse and it will show me for bigger patterns. Well, prices, volume, these all things are there. But then what we are interested into is where exactly the price is going. Whether it's going high or it's going low. Where are more people? People are on the buy side or people are there on the sell side? So prices are the final thing out of supply and demand. So if supply is high, right, there will be more people to sell, which means prices may come down. When price can go up, or when the demand is going up, prices will go up. So a tug of war is going on between buyer and seller in every time frame. So what I might be interested into is, okay, this is the chart pattern, but then what I want to see that within a specific time, let's say that time is 1 minute, or maybe that time is 10 minutes. So on that 10-minute time, whether it's the people who wanted to buy, they were on the higher side, or the people who wanted to sell were there on the higher side. Whether price opened at some level, so let's say this is 1 minute, 10 minute of time frame, this is point 1 of that 10 minutes, just a starting point, and Reliance opened at, let's say, 1501 rupee. Opened means last traded price of this 10-minute interval at the very beginning is, let's say, we call it 1501 rupee. Now, it opened at 1501, but it went up to 1510 within that 10 minutes itself. Means it went up to, but then again it came down. Where? It came down to even 1490. Means it opened at 1501, went up to 1509, but closed at the end of 10 minutes at 1490. Means almost 11 rupees lower. Now what you can say? You can say that price was on the red side. I mean, that specific 10 minutes of time frame, there were sellers who won this tug of war. More people sold. More people were on the side of either profit booking or initiating a short trade, isn't it? So anything which is on the negative side, we can denote it by red color. So let's say these are those red colors. But you know what? What are the information I'm trying to pass you here, or what I want to actually learn first? That, okay, in specific, I know that supply and demand cannot be constant all life. It can vary from one time frame to another time frame. If I am one trader who trades on a very small time frame, I would be interested into that small time frame. So let's say I am a trader who want to be a scalper, who want to just collect 2 rupees, 3 rupees out of 1500 rupees Reliance. I may want to just see that in every minute what is happening. But then I can be a long-term investor. I give you the example, the classical example, 1500, 1700, 5 times, same pattern for 6 months. I'm looking to buy Reliance for, let's say, 6 years, 5 years time frame, long-term investments, I have to send my child after 7 years to graduation. So for next 7 years, I want to do some proper investment. I'm looking for a right entry to find. This is my purpose. Well, I can not look at 1 minute time frame, but I can certainly look at 1 day time frame. I can certainly look at 1 month time frame, that in 1 month specifically, where exactly Reliance started trading, what kind of high it made, what kind of low it made, and whether it closed above wherever it started or below where it started. So first day is, let's say, 1st January. 1st January it started at 1501. Within January it went to 1550. But then it closed at 1450 at 31st January, which is the last trading day. It gives me a lot of information, right? It shows me that, okay, in that one specific month, it was in this kind of range. It opened higher, closed lower. Or the other way around, it opened lower, closed higher. Buyer won last month. It's not the seller, because opened lower and closed higher. So what I'm trying to tell you here, I'm trying to confuse you here, right? When I'm making so much of a statement, isn't that you will get confused? Or isn't it that you won't be able to visualize it? But then I can tell you that within technical analysis, you can visualize it very easily. TradingView can do it for you. So TradingView is probably one environment. This is that environment I'm talking about. But within this environment, let's say there are people now who can tell you that, I can summarize this whole information for you just in the form of one graphical representation, just one line. Now, you know what can be that line and how it can look like? So let me show you something like this. Let's enlarge it a little. Don't worry whether you are aware about TradingView or not. I'm not taking you there right now. I'm just trying to make some sense that why these tools are important and what are those important tools. So here, let's say this is specific. Forget about it, that what it looked like or what people call it, the technical analysis. Consider that you are a 5th class student. Maybe class 1 of your technical analysis is going on and you saw something like this. Then what do you want to say that? What information is it revealing? So it is revealing me one information. The very first thing is that in the tug of war of price, it's the buyer who won. Means whatever the time interval it is denoting, in that time interval, it opened lower and closed higher. And for that reason, it is green. In this case, the very next graphical thing is saying that it opened higher, but then in that specific time frame, there were people who came and started selling. So it opened higher and closed lower. So here the seller won. This is all these two color schemes are telling you. Obviously, you can go inside this and change the color, but then I'll keep this color throughout the class. You don't need to change it. Anything better is happening where things are starting lower and closing higher should be called green, and anything which is opening higher and closing lower should be red. So we'll keep this constant. Well, okay, so two information I got just because of the color of this graph, that in this green thing, which is time frame pricing, now this one day is now making sense. So this one day on this chart is nothing, which is also like, this D is what I have selected from here, but I don't want you to right now, getting anywhere, because this is more of a philosophical class, more of a class where I want to tell you that why these things are important. Why volume is important, why price is important, why graphical representation is important. So I shown you that you have to make one statement, long statement, that it opened higher, closed lower, and when it closed lower, actually it went even lower than that, but then it jumped from there. A lot of summary you have to write for just one graphical representation. What this graphical representation can tell you by if you follow the rule. So the rule says here that yes, green means opened lower and closed higher. Red is opened higher, closed lower. But then more information is needed. So what is the information here? So it says that if I pick up the green candle, it says that, okay, now I have revealed the name. So this is called nothing but the candlestick. You would have heard a lot about candlestick, right? So this is candlestick. So it is the easiest chart type. So the way I told you, this is probably the most extensive tool, the TradingView, to use. Similarly, to bring all the data into the graphical representation form, this is probably the simplest or one chart through which we can reveal the maximum information about price within one time frame. Volume is something which I have to add into this tool. I'm not going there. Maybe I'll show you towards the end. But yes, this is what you are getting is like, this is green, price of war was won by buyers. It opened higher and it opened lower and closed higher. So this is the price where it closed. 2-1, can you see here? 2-1 here, here. So 2134.05. It opened here. Okay, but now you can see some thin line is there. You know what is this thin line? So this thin line is telling you that it opened certainly at 2134 or 2114, but then after opening So here the mouse is, yeah, 1 second. So I'll pull up some other candle then here. So here, let's say talk about this candle maybe. Okay, let's talk about this candle. This is green, this is red. Let's talk about this. So here, this is a green candle, means 2061 is where it opened. And it closed at higher, 2087. Good, a good 25 points. Okay. Now, what is this thin line talking about? This thin line is that when it opened at 2061, it went even little lower. How much? 2055. But then from here, it jumped. And it jumped and it went up to 2109. And then it closed here. This is one way of saying. Another, it opened at 2062, went up to even 2108. This is 1 day chart, so anything can happen. Stock can go up and down and up and down. So it opened here at 2062, went up to 2109, went down and came up to 2055, but then settled and closed here at 2087. So what does it mean that it opened here and closed here certainly, but within this time frame, it made a high of 2109 and it made a low of 2055. So these thinner lines within this candlestick is telling you the lowest price of that time frame, and this is telling you the highest price of that time frame. Well, and the final result is that in this one specific day, 23rd March, since in this whole chart, this one candle is denoting 1 day, since I have taken it 1 day. Can I change it to some other? Yeah, I can change it to, let's say, 1 hour. Now, this candle will be called the price candle of 1 hour. I did nothing actually. I just pressed 1H, 1 hour. You can change it from here as well, but you can simply write 1 hour and it will take, right? I can also write 1 and it will simply take only 1 minute. Now, this is what has happened into 1 minute time frame. What has happened? It opened at the start of minute 2274. It closed at 2275. But within that 1 minute, the overall range was from here to here. And in this price of war, mostly buyer won, because in this time interval, it opened higher, lower and closed higher. Well, so what do you see here that? You see few things. One, you can represent so much of information in just one candlestick. And in this series of class, we are first going to become comfortable fully with type of candlestick charts and patterns. Okay, we will be using this and trying to make sense out of it. Let's take the example of one of the red candle also. So in the red candle, let's say, how it would have, I would like to interpret here. So here, obviously price opened here. This is stock opened at 2275. Now this is 1 minute chart. So 2275 it opened. It would have gone even higher to 2275.40. 40 paisa. It would have gone up from here. And from there it started coming down and it came down up to here, 2274.20. And then it settled somewhere 2274.35. Now this is 1 minute chart. And for that reason, you see only 15-20 paisa kind of difference. But yeah, someone who is saying that I'm an intraday trader, probably he want to just see that how prices are moving in every minute. How many times people are winning, buyers are winning, how many times sellers are winning. We'll start interpreting it very soon. But let's say 1 hour chart here. Now suddenly things will show better pricing, right? Let's see this candle. In this candle, what do you see? It certainly opened here because it is a red candle. It opened higher, closed lower, but then the overall range was from this to this. It came up to 2175.05 and on the higher side it went up to 2193 in 1 hour. So can you see that one graphical representation is able to reveal 4 information? One, in that time frame, whether it was the it was the group of buyers who led from the front, or it was the group of sellers. Whether prices in that specific time frame went up to what high price. Third, up to what lowest price. Fourth, where it opened. Fifth, where it closed. Just one graphical representation with combination of hour, time frame can tell you so much of information. Now start thinking in a way that how powerful it can be when you have to visualize data and have to take some discretionary decision about looking at the pattern of the prices. Well, pattern we have not started yet because pattern is the bigger picture. We will make patterns out of these information and these are called candlestick. Don't worry again, as I said, that you don't know about TradingView, because in the next class we will learn about TradingView first. How to set up, how to come up to this screen, what are the important things to work upon. But yes, what I was able to show you is the power of graphical representation of data, power of technical analysis, that how you can use it. Well, I was talking about volume. Can I add volume here? So all I have to do is type volume and then do you see that I can also show you that during that candle what kind of volume happened, right? So there are different indicators and tools. These are the very simplest thing, as it was a very basic discussion on technical analysis where my agenda was to tell you that how powerful it can be, that you have something where you can visualize the data in a much better way. Now, historically, what kind of patterns have been created, which you need to know, and so many other things related with price action, related with the chartings, related with exceptions, are something which we will learn in the coming classes about TradingView, about what are the precautions you have to take on the technical analysis side. For example, I want to tell you that it is very important that you get into doing technical analysis in liquid instruments which get traded in a very huge volume, where enough number of buyers and sellers are there, right? So these kind of things you need to know before you say that yes, I want to use technical analysis for all my purpose of trading and investing and maybe complementing my trading strategies with the understanding chart patterns and technical analysis. But all these things we will cover in the coming classes. Please comment and let me know how did you find this class, what are the improvement I have to do, whether I was going too slow or it was completely okay, whether I made your understanding about the technical analysis made easy. I know people who are already technical analysis, for them it could be a very basic thing, but then yes, we need to start from the basic because I also don't know what kind of audience are going to watch this video. But yeah, I was able to show you that what is the power of graphical representation and what uses you can do and what is the microstructure of the technical analysis, what make technical analyst relevant. Now, what could be their accuracy, what all benefits it has is something which we'll see in the coming classes. Till that time, thank you. As I said, I'm going to upload this class also on YouTube and I'm looking for 10,000 views. The moment I get 10,000 views, I will upload another class also on YouTube. Otherwise, anyway, this is going to be the content for my financial literacy course as well as the courses in options and statistical arbitrage, because I want them to be empowered with technical analysis as well. And for that purpose, I have started this series. Thank you very much and Yeah, that's all. See you in the next class. Thank you.